Greetings once again from Sprott Money and SprottMoney.com. We're now into the middle part of November. That means on the calendar, it's time for your Ask the Expert segment. I'm your host, Craig Hemke, as usual, and joining me this month is a new guest, someone I just met a couple of months ago. I've had him on my TF Metals Report site, and I thought I got to share him with everybody that watches the Sprott Money channel. He's Michael Belkin, and he is the author of the Belkin Report and the Belkin Gold Stock Report, and he has a really interesting background, been doing this a long time, and he's a voice I want to introduce to everybody. So anyway, Michael, with that, thank you for joining me.
Thanks for having me.
Hey, before we get started, it is middle of November. That means it's pretty soon going to be the holiday season. One of the most anticipated events at Sprott Money, you can get the holiday gift guide. It's not there yet. Keep your eye on SprottMoney.com for that holiday gift guide. It's one of the best sales they have all year, and give the gift of sound money this Christmas. It's a gift that keeps giving the whole year, Clark. So keep an eye on SprottMoney.com. In the meantime, great deals, gold and silver, even some platinum. So thank them for putting this and funding all of this content all month long. Michael, before we get rolling, like I said, I really appreciate your work, and it's unique, and your background is unique. So for people that don't know you, just give everybody a couple minutes about your background, what drew you to finance, and a little bit about the Belkin Report.
Okay, so I published the Belkin Report and the Belkin Gold Stock Forecast. I've been doing the Belkin Report for 33 years now. My background was at Solomon Brothers. I was a quantitative strategist in prop trading, running the house account on the equity side in the late 80s, in the kind of the glory years, liar's poker time. And my background before that was at UC Berkeley Business School and Statistics Department. And I developed a forecasting model based on time series analysis. So what I do is really, it's kind of unique. I don't really know anybody else that I have a unique proprietary model. And so everything I'm looking at is a forecast. It's not like a chart that ends today. I'm looking at the next 12 periods, what's supposed to happen. So I'm a lot of times I'm looking for turning points. And those can be in different things. The macro stuff is currently very bearish. So I'm, on the overall market, we've rallied for 6-7 months from the April lows after the Trump tariff thing. He turned the corner. Everybody's really got bulled up at the top here. And so I see downside risk in the stock market, extreme. So to me, long-term forecast, that's using monthly data. It looks like a long-term top here. So I'm not friendly to stocks. I think you don't want to be in the market. I think the market is infected with this crazy AI euphoria, and particularly meme stock people. So they really bought into this whole thing, Palantir, Meta, Tesla, so these guys are long up the wazoo. And so just to give you a little background, I was incredibly bullish on gold and gold stocks. So the Belkin Report, the GDX and gold stocks were my top long recommendation all year. And the GDX is still up about 100-something%, right? Which is insane. Mm-hmm. So when I started out early this year, the forecast was up. Nobody liked them. There's been outflows from GDX all year until August. And all of a sudden, people are now on board this trade, and I'm going, wait a minute. So the Belkin Gold Stock forecast comes out every 2 weeks, and the one that just came out last week is entitled "Taking Profits." So I've had a major change in the last few weeks where I've been this incredible bull on gold and gold stocks. Now I think at the very least, we go into a correction phase, right? Where, we're back up near the highs. They rallied up the last week or 10 days or so. And the major problem here is, let's give you an example. So GLD is a meme stock. So that's GLD, the physical gold ETF. Yeah. It's ranked number 7 on the fear and greed meter of retail investor meme stocks. And that scares the heck out of me. So all of a sudden, this was not like this. When I was really bullish earlier this year, John Hathaway is a friend of mine. We were both, wondering why everybody was so bearish on gold and nobody owned it. So the situation has completely changed. Now gold is like a meme stock. And here's a further flesh that out. The 200-day correlation between physical gold to the S&P 500 is now 0.7, and that is really high. So basically, unfortunately, I think that gold and silver and gold stocks have been caught up in this meme stock mania and this AI. And it's just something else that these gamblers, basically people that are basically casino players, are, it's just they don't care what it is, that none of the background of things that matter about gold, you know. So that's the problem short term. I don't think it's the end, but I just think for the next month or two, you want to be careful. And it's changed the physical, actually the gold stocks that I recommend. So I go through I cover all the investable gold stocks, not moose pasture, things that are investable for institutions. My clients are mostly big institutions, family offices, mutual funds, hedge funds, insurance companies, sovereign wealth funds, things like that. And so these guys, to move the meter, you have to be able to invest a few million at least in that stock without, shaking it up too much. So I cover all of those. And so the rotation has changed a lot now too. So the stocks that I was recommending previously have changed, so things like B2 Gold, that hasn't worked. That's out. I had First Majestic these did work a lot. So First Majestic, McEwen Mining, things like that. Those are no longer the stocks that look like outperform forecasts. So just to sum up, the overall macro view looks perilous out there. And so the downside risk, just to give you an idea, when the wheels start coming off, I do have to mention Bitcoin too. Okay, so Bitcoin is like the alternative to gold, right? And all these young uns, the millennials and everybody else on the younger side of things, they've been hooked into crypto assets. And all of a sudden, so Bitcoin today is around 100,000, 101,000 last time I looked, down from 124 or something, I think was the peak. So it's had a 20% decline while the stock market is held up. And just to give you an idea, where do things go in sell-offs? 200-week average. That's the intermediate term target in downtrends. And for Bitcoin, hold on to your hat. That's around 55,000. Okay. And it's like 100,000. So that's kind of bearish. Again, back to who is in this market. It's these gamblers and speculators that don't really know market history. Young people haven't had the experience of a 50% decline in the market. That happened in 2008, 2009. That happened back in the tech bubble from 2000 peak to 2002 low. The Nasdaq went down 86% back then. Not right away, but series, stair step down. So downside risk is a lot in Bitcoin, and the Bitcoin stocks look terrible. So there's Bitcoin mining stocks. I'm short those in my work, and I also run a portfolio in a alpha capture fund, and so that's a hedge fund that takes contributions from people like me, as well as sell side, buy side. They have 188 contributors. I've been number one twice in that this year. They do a quarterly ranking. And so far this year, I'm up 77% in that. That's market neutral. And I hate boasting, because the first thing that happens is a bulldozer comes out of left field and flattens you. I'm not boasting, but it's a test of how the model works and how, I apply it for them. And so basically I was long a lot of gold stocks in Q3, and I was up 58%. So that's where the lion's share of the gains came this year. I'm completely out of that this year, and I'm short. It has a short focus now, and I'm short things like Bitcoin mining stocks, a bunch of those, meme stocks, Palantir, Tesla, and it's working. Again, so I'm up 10%. Latest, it's a moving target. But anyways, so that's the overall view. Be careful out there. I'm a long-term bull on gold, and the long-term forecast remains up, and it remains outperform. And all the things that were bullish before remain bullish. Central banks are buying gold. They're replacing the dollar, and all that. That's not going away, right, anytime soon. But it's just like things got ahead of themselves, and the wrong people are now in the gold market. So I'm not happy with the speculators, the people that missed the whole rally. Now they're buying them at the top. The same guys that are long Bitcoin, which is crashing, Bitcoin stocks, which are crashing, meme stocks, which are starting to turn down. They haven't crashed yet, but it's just a wrong equation. So I guess my overall view is we go into sort of a trading range where you could trade it short term, where you get these rallies like we've had the last 10 days in gold stocks. But overall, I'd be cautious. I'd be taking profits.
Well, and that's part of why I sought you out, Michael, because there are so many voices out there now that have never experienced a bull market, a bear market, a pullback, right? And I just think, I'm going to start putting myself in this category because now I'm getting up there in age too. But some of us have seen a lot. And I think there's great valuable in that hard-earned wisdom and experience that you have. What you're describing in gold is not inconsistent at all with what I've been writing here at sprottmoney.com and with the pattern. I mean, gold peaked out on April 22nd and then went sideways into the end of August,
Right.
turning along in a consolidation phase before the next breakout. And it's been working a pretty consistent consolidation and then bolt pattern for about a year and a half now. What in your work would then you be watching for? Because I understand, I'm thinking consolidation too. What will you be looking for, say, if we get into the first quarter of next year as being a sign, okay, safe back to get back in the water, we're waiting for the next leg up?
Good question. So the model forecast. So right now, the intermediate term forecast, which is using weekly data, so 12 periods, 12 weeks, 3 months, 3 months, ballpark, it's been going on for, that is down for everything, for gold, for the GDX, for the NASDAQ, for Bitcoin, all those things. So I think just everything goes into this correction phase, and how bad it gets in the overall market, I think will spill over into gold and gold stocks. So
Yeah.
I don't think they're immune. So basically what I want to see, to answer your question more specifically, I want gold to be negatively correlated to the stock market. I don't want
Okay.
it just to be another meme stock, a thing that the gamblers and speculators that don't know, S from Shinola, about long-term cycles and market tops and turning points. I want those people need to get shaken out. And so basically, I want to see the correlation change. And right now I'm not seeing it. And also same thing with silver. So silver, all of a sudden it's acted stronger in this bounce back last 10 days, but the forecast doesn't look good. And some of the silver stocks that were my favorite longs are now, they're just rolled off, so First Majestic, things like that.
Right.
Coor. So
Cool.
Coors has been, of course, they did a merger, so they're getting whacked on that. But
But
that stock's
still,
been getting hit. And McEwen, which is, it's got is a silver play. Things like that just don't look good anymore. So what does look okay? So the leading stocks. So I'm always looking for stocks that will outperform the GDX and the XAU index. And right now, that's shifted in the last week or two to things like Anglo Gold. It's moved up. Pan American Silver. So there's one,
yeah.
PAAS. It was a dog. It underperformed. It's turning into an outperformer, but that might not necessarily mean it goes up. So I'm always looking at things relative and absolute. And the absolute is not up so much for anything anymore, but the outperform. So it's things, and then it's the big boys, Kinross, Newmont, Barrick. So Barrick has been an underperformer, right? Symbol B, B is for Barrick. Back to Dr. Seuss here. Anyways, so Barrick has been an underperformer until a month or two ago. It's starting to outperform, and so that's what I'm always looking for. Where can you get a bit of an advantage? So instead of the stocks that I was recommending, which were more mid-tier, some smaller ones, but mostly mid-tier ones, those are not looking so great anymore. And things, it's more like defensive names, big, large cap names. Barrick, even Newmont. Those have been under. A lot of the GDXJ, so the mid cap, those outperformed for a while,
Yeah.
and now it's kind of turning. So I went through the silver stocks. Nothing looks very exciting to me. So I'm just nervous. So if you made a bunch of money in the gold stocks, you might want to do something like hedge it with a GDX put, or sell calls against it, or do something. If you're still a long-term believer in gold, I'm not saying, sell everything and head for the hills, but do something to lock in those gains. I mean, these have been extraordinary gains, I mean, up
Right.
100%. This is, I mean, after you as well as I do, it was rough sledding for, in the gold stock land for
Phew,
the last few years until
for a
this year.
decade. Yeah.
We were licking our wounds and we're wondering, like, why isn't this stuff going up? I had a lot of conversations like that with John Hathaway. And so anyways, count your blessings. I don't think it's the end of the story, but it could be kind of, rough weather. We have some winter, the storms start rolling in, maybe a storm. You want to be able to withstand the storm and hold on to some of these gains if you've made big money in these things.
I'm thinking of the chart that Ronnie Sturfel is the guy that writes the In Gold We Trust report. And he always puts out a chart of gold in all the different currencies, gains and losses since the century began. So 25 years now. And there are random 25% years in gold, three or four of them. And then they're all followed by either down or something in the single digits. Michael, we did 25% last year. And what are we this year? 60% on
Right.
top of that? So, yeah, I think your message is something that everybody should be listening to. Like you said, though, if you get a general market pullback that goes along, since Bitcoin and the Nasdaq are so closely correlated, and if you get, I guess if I understand you right, maybe the stock market pulling back 15-20% and the Bitcoin pulling back 15-20%, but gold maybe only going sideways. That would be a relative positive.
Yeah, that's pretty much what I'm looking for, except
Yeah,
going sideways could be these big short-term swings up and down. So, what have
right.
we had, a 15% rally in the GDX or something in the last 10 days? Um, so it could easily go back, stretch to the bottom of where it was, a couple weeks ago, if not more, just kind of stretch out one of those kind of sideways ranges. But those can tear you up, if you get like up here, if you start getting bullish at the top. So, who was it that said, Sir John Templeton, the time to buy is at the point of maximum pessimism, and the time to sell is at the point of maximum optimism. And
Yeah.
I think investors should really keep that in the back of their mind. And the overall stock market, it's fun. So if you look at the fear and greed index, CNN, greed and fear, whatever it's called, right now it's negative. So I mean, things like the VIX is going up. The things that go into that's negative for the stock market. But that's not how people are positioned. So if you look at the Association of American Association of Active Investment Managers, kind of garbled that. Anyways, it
Whatever that is.
shows how committed they are to the stock market, and they still have like a super high. They just had week 2 weeks ago, it hit the highest level of the year. So there's all these like fully invested bears out there. These are institutional money managers. So they drank the Kool-Aid. They think, they read the tweets and they say the tariffs are great, and everything is, what economy is wonderful, and blah blah blah. And they see these retail investors are all bulled up. So they so I that has to get flushed out. So we'll see how this works out. But the thing that worries me is, right now I'm reading the new book, 1929, by the CNBC author. It's a great book. I just
Oh,
started it.
yeah, it's working.
But one of the things that jumped out to me just reading the first few chapters of it is how invested, after the 1920s, people believed it was going up forever, and they had all their money in the market. But it's way beyond that now. So here you've got, even my son has got roped into this Robinhood account where they deduct money. My son, who hardly makes any money, they're deducting $100. There's this automatic deduction thing going on where they suck people into investing all in these growth stocks, right? And everyone's 401ks and everything,
Yeah.
it's such a big thing, the stock market to everyone's wealth. And that's who's feeling, so low income consumers right now, it's at the consumer sentiment's at like a low, right? It's like at a 20-year low almost, right? But the
Hmm.
people with stocks are feeling, oh, great, the stock market's up, I'm feeling great. But so the stock market goes down 20, 30%, those people aren't going to be feeling so great anymore. And so I do have to mention the AI bubble. I'm sorry, I should have mentioned that at the beginning.
No, go
So
right ahead. It's
this
important.
is like huge overinvestment. So you've got a company like Meta, right? So who is investing like crazy building these data centers. So Meta, which is Facebook, you have to remember Meta used to be called Facebook. They renamed it Meta after the metaverse, and they sunk like tens, if not hundreds of billions of dollars into metaverse, which went nowhere, right? Do you see anybody wearing those big black glasses, walking around? It just
Right.
never took off. Maybe, who knows, maybe it will, but it's been a total bust. So now what are they doing? They're going into AI, right? We've got to
Yeah.
be, everybody's investing in AI. So we've got to buy all these NVIDIA chips and build these data centers, of which there's not even enough electric power to provide. So the problem is, so a company like Meta, 98% of their revenues come from advertising. The economy goes down, their revenues go down, and their basically their data center budget, AI budget is going to go down. They're going to start cutting it. So I think Meta is sort of the canary in the coal mine. I think they'll be the first to flinch, where they say, "Wait a minute, if their stock starts going down, which it has been. By the way, Meta stock is down about 20% from its peak, and so it's leading the Mag 7 stocks down. And I think that when you start to get the first, so it's been a follow the leader thing, got to be in the AI. So Microsoft invests in AI, Amazon invests in AI, Oracle's another one's getting killed. The stock's getting killed. They can't pay for all these. They don't have the revenues to pay for this AI investment that they had promised. So, anyways, the whole thing, the wheels are starting. They're not coming off yet, but they're starting to be lug nuts coming off. And you're starting to get a warning of tires running flat. So I think it'll all start working in reverse. And it's not like AI is going away. I'm not a Luddite. I use it for in my research. It's great for summarizing things. It's a fantastic tool. But it's not going to look like this. Just like at the tech bubble top, everybody thought the internet was going to change everything in March 2000, and then
Right.
the Nasdaq went down 86%, and here we are 25 years later, and the internet did change things, but the leaders turned out to be somebody completely different from the way it looked at the time. So I think there'll be a shakeout in AI, and that's really bearish for the stock market. And unfortunately, it's I think it's going to have a spillover effect into gold and gold stocks and silver stocks for the next few months. I'm not a perma bear, but and again, this was my biggest. I was incredibly bullish on this stuff all year until about 2 weeks ago. So major change for me. Don't think it's the end of the world, but you just want to be careful here and preserve the gains if you've made some serious gains here this year in the gold space.
Yep. I feel the same way. And I think it's wise, again, words of wisdom that you can share with everybody to not get frustrated and scared off if we're just simply another consolidation pattern. It's a good time to lock in some gains. One thing we don't have to worry about this year in the gold space, Michael, is tax loss selling. If you've got losses, you might want to look into your methodology for picking stocks.
Yeah,
But
right.
anyway, it's been great to visit with you, and I know everybody watching is now aware of, hopefully aware of what you do and respectful of your opinion. I want to make sure everyone knows where they can find your work. It's a little different. It's not like going to my site and hitting the subscribe button. I want to make sure I read this off right. So for the Belkin report or the Gold Stock report, you email one of your compadres, Mark, right? That's how we do this, correct?
Yes.
Okay, and that email address, if you want to learn more about Michael's work and how to access it, is Mark with a C, MARCB, so MARCB at Hyperpyron. Did I pronounce that right?
Yes.
All right, which is HYPERPYRON. So Mark B at hyperpyron.com. Send him an email and they'll let you know how to get in touch and begin receiving the Belkin report. Hopefully, Michael, will receive you back on the Sprott Money platform sometime when we get into the new year, because again, if you and I are right and we consolidate and break out again, the pattern would follow that we've got some higher prices ahead once we break out once more. So it'll be fun to talk then.
All right.
Well, thank you for your time, Michael. And thank you, everybody, for watching. And again, please thank Sprott Money for putting all this content on the internet. You can like or subscribe at whichever channel you've been watching, but also keep an eye on sprottmoney.com for that holiday gift guide, which will be showing up, I'm sure, within a matter of days. And keep an eye on this channel. We got more content to come as we go through the month of November. For now, though, it's time to go. Thank you, everybody, for watching. Thank you, Michael. And we'll have more content from you from Sprott Money before the end of the month.